Good morning. It's Monday, May 19th. I'm Philip Streible, Chief Market Strategist at Blue Line Futures. So let's check in on some of the top headlines moving markets, the overnight price action, and what to look out for this week. So looking at the U.S. equity markets, the S&P 500 declining over 1% at 59.11. Low in the overnight session, 58.92. High was 59.48. That was that gap lower that we saw on the Sunday night open. You got the NASDAQ down 300 points, the Dow Jones down about 300. And then also the Russell down about 30 points here. So U.S. equity futures, they did decline after Moody's downgraded the U.S. government's credit rating from AAA to AA1. So citing concerns over the country's ballooning deficit and rising debt. So a lot of people have been talking about this. A lot of gold traders have been positioning for this type of downgrade here. And the downgrade led to a rise in longer-term treasury yields. So you look at 10-year treasury yields here rising up to about 4.54%. And then you look at the 30-year equivalents, they were about 5% here, a level last seen since 2023. So we got that sharp decline in the US dollar as well. So the dollar index down just about 1% at the moment. And all the foreign currencies all pushing higher, and that pushes up that gold market as well. Surprisingly, some of the other outside commodities are a bit higher. So this comes after hedge funds. They really poured into the US equities last week, and it helped the S&P 500 achieve its second biggest weekly gain on the year. So it was the largest net buying since December 2021, and it was really driven by quite a bit of short covering. So we're seeing the US equities come off of their lows, and I think a lot of these hedge funds are going to take the buy the dip mentality here on many of these markets. So we want to identify some of the key levels of support where we believe that they will start to re-enter in on that market. So we were at a resistance point about 5,900 to 5,950 coming into Friday, and that melt up here, the gap lower, and then now we should see a lot of these dips here being supported on US equities. We got very little economic data here coming out today. It's April leading index, but that is just a blend of about 10 to 12 economic indicators that previously came out. And then this week, we're just going to have a flurry of central bank speakers here. So we got Bostic, Jefferson, Williams, and Logan, Kashkari, all speaking here later on today. So Bostic will be on TV later on Bloomberg television around 1:45 p.m. So you look at the precious metals markets here, and gold last week fell about 3.7%. It was its biggest weekly loss since November, and money managers, they've been decreasing their bullish bets on gold to a 14-week low. So really that peaked around the 2,900 to 3,000 mark was where we saw the CFTC flows and the large money managers start to come out of that market. So as the market was going up, they were trimming their positions going up. So it would be interesting to see them finally come back into the market. It's just when is that going to occur, and if it will ever occur again. So you look at since Friday's downgrade, gold had recovered after its sharp declines here, really on quite a bit of safe haven demand. So the technicals, the immediate term support on the gold market is that pocket support. It's really like 31.75 down to 31.50. I know we did probe below that, but if you look at that rising channel that we had before, we came back down, we retested, and we pushed up. So your overnight high right around that 32.52, just above that's going to be your resistance point, about 32.50 to 32.65. If we get a breakout over there, it could take a potential another leg higher up to 33.50 to 33.65. I told you last week that gold looked like it was going to start to break down because of the rotation into the U.S. equities, because of the rising treasury yields at the moment. We've got somewhat of a hawkish Federal Reserve, and we just don't have a lot of the same kind of developments that we had occurring. But now we've got this Moody's downgrade. We've got a bit of price momentum going behind us. The tariff discussion is coming back to the table. The hard stance on Iran and things like that are starting to drive some of the safe haven buying. So that's why I told you 31.50 to 33.50, I think, is this new range that we're going to be trading in here for quite a while until a new catalyst drives us elsewhere. So you look at the silver market here, silver up about 42 cents, 32.77, just off the high of the session. And the same thing with the copper market, making a new high up about 4 cents at 463. So all the metals up significantly, except the aluminum market is down at the moment here. Now you look at the hedge funds, they cut their bullish bets to a 3-week low on the silver market that's ending on May 13th, according to CFTC data. So in the exchange traded funds, they cut 331,000 ounces of gold holdings in the previous trading session. So that was on Friday. They also cut about 178,000 troy ounces of silver in the last trading session here, and that was a third straight day of declines. But if you look at the last week's flows, they really went into that market the first couple days, especially the silver market. So they reduced their gold holdings by about 700,000 ounces, and they increased their silver holdings by about 2.4 million ounces. So you look at year-to-date percentage changes, you got gold, it's still decreasing about 6.4%. So people are most likely going to use these rallies to take some positions off to the upside and keep some of their powder dry. You got silver up about 2.6% year to date, so that comes in line with where we were at on Friday. The gold silver ratio sits at about 99-1. The key level to watch is 97-1. And then you go to the outside markets, you got crude oil futures down about 1.29% here, 61.16. We've taken a bit of a bearish pivot on the crude oil market. It was up significantly on Friday, but really no new news coming out there. You got Bitcoin futures trading all the way up to 107,500 before declining back down, and now we're down on the day about $1,100 at 103,000. You got Ethereum also off a bit. Some of the grains are getting a boost here. Wheat futures is one that's on my radar. Saw quite a bit of write-ups on that, back to the upside. Cattle futures back to the downside, saying that there could be a potential top on that market. So cattle futures should come under some pressure here, with U.S. equities under pressure as well. So we'll see how that opens. You guys got any questions, shoot us a call or give us an email at info@bluelinefutures.com. And remember that futures and option trading, it does involve risk of loss and may not be suitable to all investors. Good luck and good trading.